price action, the RSI, and a trend line. I'll say it again, price action, the RSI, and a trend line. Before I share this strategy with you in full, let me give you the very important settings for the RSI indicator. You'll see that I don't use it like most people do. I set the RSI to white, and in the settings, I don't use 14 periods or 7 periods, but I use 21 periods. 21 periods because the RSI performs better and gives far fewer false signals. We'll also mark the overbought zone at 70% and the oversold zone at 30%. I don't use these zones, but I still put them in because they provide useful indications to consider. Now that you know the RSI settings, let's get into the heart of the strategy I'm sharing with you. The very first rule is to switch to the daily time frame on the chart you're monitoring. You absolutely have to follow the dominant trend in this market. Here, on Bitcoin in the daily chart, despite a period of sideways movement for several weeks, the market is still very bullish as long as this daily support holds. Your goal is to follow the trend that's on the daily chart in your 1-minute scalping. Now that you have this information, you switch back to the 1-minute time frame. And here, I'll show you the first example for this strategy. You're going to see it's very simple. First, draw your trend lines correctly. You can see here, you have a first line, but you're going to draw a second line to make sure you include all the wicks that stick out like this. This way, it will prevent you, for example, from buying on a false breakout like what happened here, and it saves you from losing money for no good reason. On the contrary, we're going to focus on the real breakout, which is right here. You can see that the price breaks the downward trend line to set a new high. But for this strategy to be really effective, you also need to draw your trend lines on the RSI. You can see that the RSI will also give you a lot of clues with its peaks, its troughs, and this 50% neutral zone. Very important, as you'll see in the strategy, the perfect setup for this strategy is to follow the upward trend on the daily chart, as I showed you, to have a small downward correction over the last few hours on this market, and finally to look for buying opportunities to always stay with the trend on the higher time frame. Here, you can see that a drop has occurred, the market is moving sideways, and this allows us to draw a trend line on the RSI. Each time, you have highs that stop at the downward trend line. And what we're going to wait for is the break of the trend line on the chart and also the break of the trend line on the RSI. On top of that, what we're going to look for on the RSI is a reintegration of the 50% level. You can see here that the RSI was below the 50% zone, which is shown in yellow. The market was in this phase of stagnation and sideways movement and was still bearish on the RSI. The market only turns bullish on the RSI when it breaks above the 50% zone. This matches, as you can see on the chart, the breakout of the trend line with strong momentum. The bullish candles are large and very clear. So you have an excellent entry price here for this strategy. You're going to buy at the close of the 1-minute breakout candle, which is right here. You set your stop loss below the last low point to protect your trade as much as possible, and the target is set at the last high point. So, you'll be able to have a very comfortable, very professional, and above all, very profitable risk-reward ratio. You can see that afterwards, the market literally explodes upward. Second example, this time we're on the 1-minute chart for gold. And the first step, as you remember, is to check what's happening on the daily chart for gold. A higher time frame to avoid trading against the trend on the 1-minute chart. You can see that gold is undoubtedly very bullish. You have to be careful, because the market has reached such high prices that we could see sharp downward corrections. But for now, gold remains bullish, so on the 1-minute time frame, we're only looking for buying opportunities. We have a perfect example here. Once again, you can see a downward trend line on the chart, and a downward trend line here on the RSI. This is interesting because while the market here is rather bearish, it's also bearish on the RSI, since, as you remember, when the market is below the 50% zone, it's bearish, and when it's above, it turns bullish again. What we're waiting for is for the market to break the trend line upwards so we can take a buy position, and for the RSI to break the trend line upwards as well. The RSI also needs to move back above 50% to become definitively bullish again. You can see here that the market gives us enough upward moves to make money with this strategy. Here, we're going to place the stop loss below the wick of this candle. And as before, for the target, we're going to aim for the previous price zone that the market had worked on. So, that roughly corresponds to this area here. Here, This is a scalping strategy, so you need to take your profits quickly, aiming for at least 40 or 50 points per trade to still make a decent profit and exit your position when the price reaches the target.